Welcome to the Crypto Podcast. You can find all our episodes on thecryptopodcast.org. We're also on BitChute and YouTube. You'll find the links in the podcast description. I've got 4 other podcasts: the meditation, the speaking, learn Polish, and the awakening, exposing fraud and corruption, but with solutions. You'll find everything on bio.link/podcaster. My guest today, Bitcoiner, financial educator, and a multiple podcaster, going by the smart money chick. Please welcome Daphne Jones.
Hey, Roy. Great to be here. Thanks for having me.
No problem. I always like speaking to podcasters because, one, I see the earphones, but a decent microphone as well. So quality is always good for our listeners.
Oh, yeah. The echo, folks using the microphone either in their laptop or that's on their camera, that's built into the cameras. It's like, oh, not one of those.
Yeah, exactly. Not brilliant. So, I gave a few little bullet points, but you might let the listeners know a little more about Daphne.
Well, Bitcoin nerd. What's the term they use here? Bitcoin maximumist. Just Bitcoin. Because I see you said crypto podcast. I know of other coins and things of that nature, but I'm a Bitcoiner. Got into Bitcoin right before the start of the pandemic. And what led me to Bitcoin was I'm a recovering life insurance agent. So I talk to people about money. And the more I read actually about money, I was like, hey, you know what? This Bitcoin makes more sense. Once you read the white paper, and the big thing that got me was that it's set, that the number of coins is set, and that we don't know who Satoshi is. We don't know. And that the software is the software, the basis of the coin itself. And it's very it's decentralized, it's democratic. So I was like, you know what? I think I'm going to give it a shot. Bought in. I'm a hodler, so I buy and hold. I don't trade or stake or anything like that. And just kind of passing the word where you need to get an understanding of crypto itself and also the blockchain, which are 2 separate things. So I guess I'm going all around, but that's me. Bitcoin nerd, just like reading about money, talking about it.
And who do you think Satoshi is? Do you think it was an institution, or what's your thoughts on it?
No, I think it was a pretty smart individual. Because you have those geniuses, right? That are just as they say, man moment machine. Just that inspiration came there because it's the fruition of things, of work of others. He or she built upon the work of others. This person invented this. Okay, we got this going on. Okay, you put that together, you tilt it to the side, and it's a little different. And so I think that's where it came from. And just a need to move funds quickly and to get the government out of our business, which is, I'm seeing these central bank digital coins coming, and it's, oh, man.
Like you mentioned, because there's a set amount. And if you compare that to the Federal Reserve, which is like a printing press, and they're trying to create their own, digital currency. They're trying to get rid of cash for the last few years. That's international. And like, do we trust that? It's basically just turning the Federal Reserve into their cryptocurrency. And and they'll be just making it by 10 what they're doing at the moment.
Sure. Because governments historically try to inflate their way out of debt. I read this great book, The History of Money. And okay, you've had wars fought or rebellions because governments try to cheapen money. You've had, changing, you had the Roman coinage, and the last few emperors started to mess with the amount of gold that was in a set Roman coin because of problems they were having. They needed more money. So we'll just stretch it out. In England, you had several rebellions behind them taking the gold out of the Tower of London, because the Tower was actually a bank where they kept gold for merchants. and the king raiding their gold and so forth. Or here in the U.S., even in colonial times, you had the colonial houses. They would come up with state script that had a value for a while that was backed. But as they ran into financial issues, it would no longer be backed by gold. They would just keep printing and printing. And then they would force you to have to use, they would force individuals to use those script to pay taxes and things like that. They'd make you make it currency. So, because currency is basically just an agreement. It's not that the government says what currency is. It's an agreement between you and me on value. You know, we say what the value of something is, what the market does. So, and Bitcoin, because of its decentralization, doesn't deal with that.
I think it was Nixon in 73 took it again off the gold.
Yeah, that was the final.
Right. Yeah, exactly. Yeah, so
right. But it started earlier when in the Depression, FDR said you couldn't hold gold anymore.
That was 33 they started, I think, when they had that Jekyll Island meeting, like, and it's like,
right.
That's what I find so strange, that everything is kind of there. We all know it, but there's no accountability. And I think that's the frustration in the world. We all know who's guilty of all these different things, and there's solutions for a lot of it, but it's like they do it and they just laugh in our face as they're doing it.
Well, I think it's, as a person, because you're trying to live, you're raising your kids, you're running your business. I don't have time to be carrying a sign and raising hell out in the streets. You know, I got to get home and cook dinner and check homework. So that's what they're counting on is you read it, you find out about it. So Bitcoin also is a bit of a protest. You know, crypto is a bit of a protest. We can, okay, look, you know what? We're going to have to divest of the system just in some way. In some way, I got to make a stand. I got to prepare myself. So I'm gonna get some Bitcoin and I'm gonna control the keys and things like that. That's what I'm gonna do. That's my answer.
Did you look at the mining at all? Did you ever start mining?
I looked at it. I have a node. I don't mind because again, by the time I got into Bitcoin, I was a bit, late to the game. Well, not late to the game, but I didn't enter at a time when you could just mine with a laptop or something of that nature. By that time, it had gotten so sophisticated. You needed the cards and the speed and what pool are you going to get into? And once again, I had other interests. If I was going to solo, if that was going to be my day, like it is with some of the folks I've seen, then I would have, but no. I went to Bitcoin 2022 in Florida, South Beach. And man, they've got some great mining gear. I put some pictures up on my Instagram. They've got stuff that mines underwater because, with the heat that the miners generate. So that's one of the things that they've shown. You now can get GenX boxes, the containers to go aboard ship. They now have, they can bring it to your house and got all the gear and AC and all that stuff in there. So mining, I mean, it's become an industry too. So.
Well, I think if you can use it as a heat exchanger to heat your house or your water,
right,
then it makes sense because you're using the electricity. If you're able to kind of double dip into it, as well as making the income, then it makes sense.
Well, I've seen that. That's also, you've got miners who live in the northern states here in the U.S. that are doing that. They live like in Minnesota and Michigan in the wintertime, that's what they're doing. That they're putting the hot air into their like attics and things like that to supplement their heating. Because it gets pretty cold up there. That's where I grew up.
I saw one of the pictures in a snowy area and, the roof was clear. They were saying before you knew the person was doing weed and now, now they're a miner.
Yeah, miner. Can't get snow on there.
So with the wallets then, what wallets do you actually recommend? Because there's a few of them out there and some of them are kind of complex and I'm just curious what you...
Well, I use a real basic one. I use a wallet from a company called Ballet. It's by Bobby Lee, the guy that started basically started Bitcoin in China. He started that exchange. I met him at again at Bitcoin 2022, and he's got a cool card that's easy to use. It's a metal card, and it's very easy to use. It's totally cold. It's not connected to your phone or anything, and it actually keeps your information on the card is on the card about how to access. So you have to keep the card very secure itself. But for someone that's getting started, that is not overly technical involved and so forth, it's pretty easy to use. So I got one there, and that's what I've been using. That's where I kind of keep my stuff at. But you have to keep your card stored safely. So
Yeah, and
so that
what
would be
about
like the one drawback.
Yeah, but still, it's one I haven't heard of, so I'll be checking that
Right.
out. And what about exchanges then? What exchanges do you recommend?
I pretty much I'm with Swan Bitcoin, because they just do Bitcoin. What's it? SWANN. They're based here in the States.
Okay.
So that's where I purchased, and it was the easiest as far as turning fiat into Bitcoin and so forth. And I liked them because they were just Bitcoin, and they weren't involved in any trading or anything of that nature, staking and things of that nature.
That was one thing that I found strange, because it's simple to buy crypto, not just Bitcoin, but any of them. But when you're selling it for fiat currency, it ain't that easy. It's
No.
yeah, because like not everybody wants to be giving your address and your personal details. And it's, because some people think, yeah, it's like, there's some people are for regulation, others are not. And you don't want to be giving your information away. And if you can do that, brilliant. But I found that just trying to cash it in, it was like very difficult. And there's kind of ATMs. That's how I got around it, to be honest. There's ATMs, and once you keep it below, I think $1,000 or something like that, you can do the transactions. They take 3.5%, 4%. I know that I went up to about 8%, but still, it's an inconvenience when I thought I could just maybe transfer it to a debit card or a PayPal account or something like that. I thought that's all I needed to do.
Well, it's getting easier with Bitcoin and just crypto period, with the Lightning Network. That's helping somewhat, but it's because the government has gotten involved in it. Like here in the States with the KYC, know your customer. And the whole thing behind crypto, the whole concept from the white paper on, was anonymity, that it was nobody's business. If you knew, we should be able to transfer goods and services, and then payment for that's nobody's business. That was the whole thing behind it. So to make it more difficult, because they want their piece of the pie. So,
and with the Bitcoin, like, because I know that if you're doing massive transactions, it's fantastic Bitcoin, because compared to the banks, because I know just from doing a lot of currency exchanges with property previously, a lot of the banks were charging 5% for currency exchange, even up to 10%, because they were doing dirty tricks saying, oh, it needed to go from Polish zloty to euro to dollar, which was a complete lie, but people were believing it. And then you've got a lot of companies now like Wise, Revolut, and they've brought it way down, 0.3 and even maybe less. But with smaller amounts, like if you go in and buy your coffee, the Bitcoin transaction fee didn't justify it, because it's $2 or $3 on top of it. But I believe that they light. I mean, I'm not familiar, I haven't used it, but I think El Salvador is doing it. So you understand that
right. So the transaction cost has been brought down. And now you have companies that have found a way, because you got the Lightning Network, and then I think it's Strike is working very hard to integrate Bitcoin into daily transactions. So you have to bring the cost down. So, and again, it's more so due to governmental regulatory things that are keeping the cost up, more so than the actual what can be done about the technology. For instance, here in the U.S., you have a big business in remittances. People from particularly, everywhere. They come here to work and send money home. And there's a $1 billion industry in sending money, particularly to Latin America, whether it be Mexico or Panama or what have you. And it's found that Bitcoin is much cheaper when you're trying to send money home and things like that. So it's growing, and that's why, because I know over here the government has now taken the last 14 months or so has been just a big sea change as far as government attention to crypto. All of a sudden, they're really interested in what's going on. And I think the freedom aspect is what the problem is that the thought of money being moved and they don't have control of it or know what's going on with it is driving them crazy. And they're coming close to those of us in the community wised up and are now trying to get them educated. But it's the freedom, I think, that scares them. Well, I know it is.
And with FTX, I mean, that hasn't helped.
No.
But the sad part is the regulator, Gary Gensler, who's MIT, all the connection there. So it's like, that straight away is telling you that's why you shouldn't be regulated, because we can't trust them. It's the people. I mean, even if you look at everything the CIA has done when they release documents 50 years later or 100 years later, when there's no accountability.
Yeah, everybody's dead.
We're going to trust these people, and that's not just against the America. That's all over the world. So they're all the exact same.
Sure. So there are certain risks in freedom anyway. That's why it's freedom. It's, it can be scary. And there was some greed that got involved on both sides. One, the guy that did the stealing, that's one that actually ran FTX, because he was looting the company to go buy bad stocks. So that's a bad thing and illegal on its face. It was embezzlement. I said, Roy, give me your money. I'm going to hold it for you. And I'm buying cars. That's a bad thing. But also, when I saw that, the quote, well, we don't even want to call it fintech, but the whole staking and things of this nature of coins and stuff, it never, as I looked at it and I saw the returns from, the folks were telling me, yeah, get your money here. And I go, okay, but you guys are kind of acting like a bank, but you're not showing me the transparency of a bank. That makes sense?
Yeah.
So it was okay when we were all just being Bitcoin people. I got that, right? But you're talking about interest payments, and now you're getting into banking stuff. And that requires a different level of transparency that and paperwork and things of this nature that you're not giving me. You're just saying magically, I give you this money, and then on the other end, I get this. And I know that doesn't make sense. So, because I just watched it. I watched the returns. And if you got in early on the staking trading deal, you made out like bandits. I saw some lives change. I saw people buy houses and all sorts of things, trading various coins and so forth. I know I'm mixing two things together because staking is different from trading coins, but you kind of just sat back and watched. I said, I'm a bit of a conservative investor to start with. So as I said, those things, now you're getting into areas that you start needing prospectus and understanding of what's going on with the company and things like that. And you didn't get that in the early days.
Okay. And I know you talk a lot about kind of life insurance for GenX women.
Mm-hmm.
Is there life insurances and other investments where they're actually investing in Bitcoin, or do they stay away from that?
Well, here in the U.S., you now have a couple of IRAs that are backed with Bitcoin. Those are individual retirement accounts. They're government approved accounts where you put money in and there's an engine that helps you earn interest. Before, it was usually either mutual funds, shares in mutual funds, or actual stocks, things of that nature. Well, now they're letting Bitcoin come into these. So there's a few companies that are doing it. Again, the whole reason for me to do Bitcoin was that I didn't want other people in my business. So I don't particularly do that. So I don't participate. I know they exist. And if it gets the wider audience to take a look at Bitcoin, that's cool. I would not recommend. There are no life insurance policies that are backed by Bitcoin, because the basic purpose of the life insurance is to make sure that you have X amount of money available, at death, and Bitcoin fluctuates. So,
and just on that, because I mean, I know it's kind of gone off the crypto side, but I mean, at the end of the day, I think it's important, financial planning. And you seem to, you've picked a niche for Gen X women, which is a good thing, I believe. So, like, for those that kind of haven't thought about it, you might kind of talk a little bit about that.
You mean financial planning for Gen X women?
Yeah.
Well, okay. So Gen X, we're 1965 to 1980, regardless of where you were born. And financial planning for women, and I can only speak from where I'm from, is a bit different than men. Well, one is wages. Women but numbers bear out, don't make as much money as men. That often has to do with the type of fields women have gone into that women predominate. Secondly, often our employment history is a bit spottier because we bear children. And we're the primary caregivers, not only of the kids, but like if a parent gets sick, things of this nature. It's usually the wife that takes a step back. So that affects retirement, because that affects how you saved for retirement and plans that you've made. So you've got to take all that into consideration as you're making your plans as far as retirement is concerned. So, and it's actually just, the basic is, hey, you need to make decisions. You need to take control of your future and where it's going to be. Not just that you're married and you're intertwined with your husband or putting the kids first. You need to be aware of what's going on with you financially and where you want to go. Self-dependence. You need to make plans. And so, for instance, Bitcoin fits into that, about control and how much money you're making, savings versus investing for retirement, starting a business or buying into a business, things like that. You just need to put the effort into being aware of your money. It's not just kind of floating along, getting your paycheck and then you wake up one morning and you're 65, that sort of thing.
And like, I know that before it was a case of when one of the spouses died, then the pension kicked in. But when they died, then it just disappeared. Is that still the situation, or does it kind of transfer to the kids? Because the reality is your money has been invested and it's growing and you're getting, whether it's 5% or whatever percentage back. But is there ways that the money is not disappear once the second parent dies and it can pass on to next generations?
Okay. So are you talking about as far as pensions or life insurance?
Well, I suppose life insurance is kind of a once payout, or can it be a monthly kind of thing? But pensions I know pensions kind of operate like that as well.
Right. Okay. So pensions are a little separate. We'll talk about pensions first. So pensions, here in the States, pensions are usually paid by private companies, right? They come from the company. Okay. And you have governmental pensions because you were a government employee. So there are some basic rules. But the pension tends to end when the person who received the pension dies. If you make decisions about when you retire that you want to receive 2 checks, pensions alter when the person who receives the pension dies. If arrangements haven't been made, and depending on the company, again, there may be no more pension once they die. Or some companies do a lump payout once the individual dies. You're receiving a pension from, say, General Motors. Okay, you die. There's either sometimes the check can continue in a form, or sometimes there's just a payout to the spouse of a pension. And then here in the U.S., it started in the 70s, where individuals began to invest monies themselves for their retirement. If there's any funds left in those type of accounts, they tend to go to whoever the beneficiary is. If the beneficiary was the spouse, or if it was the kids and something of that nature. But there definitely is no passing pensions on to your pensions onto the kids. Not here. Not here.
And I mean, I think it's the same in most places, which is when you think of it, they're taking their fees anyway the whole time.
Right.
And it's your money.
Mm-hmm.
And the fact that it just says, oh, thanks very much, now it's ours. It's kind of
Right.
it just shows
Right.
the
Right.
corruption internationally. Like
Yeah. Well, yes. And that's why I say investing versus savings for retirement. Because as you say, you're a businessman. You have several businesses. You got podcasts. Okay. So you have to have a money mix where the first thing to do is to earn enough money above the fixed cost that it costs you to live. And then you start putting the excess funds to work, whether it be in the market, whether it be in cash flowing real estate, whether you're buying interest in a business that you want to run, or you just want to be a partner, franchise, things of that nature. So there has to be various things that make up your portfolio, because once you do retire, the basic idea was you're pulling down on those resources, right? Well, you still want those resources to continue to grow and perform. So instead of just having a retirement account that you take money out of, you need to have something that's a growing concern, as they say. And real estate and a business does that for you.
Well, I like in America the way you can take it out and kind of do it yourself. Whereas, yeah, I didn't have that option. I had a bond and a pension in Ireland, and I turned 50, and you're allowed to take out 25% lump sum. And I was looking at the return where they're kind of showing you, okay, it's going to be, if it's 8% a year, you'll have this. If it's 6%, every year they're showing you that, but it's never that. It's like when the years are fantastic, you see a little trickle, but when they're bad, you take the full hit on it. And it's like, so I just thought I'll take one of them out, and got to 25% tax free, but they took 50% tax on the rest. And it's like, yeah, exactly. It's like, they're really pushing people to do the pensions when not all the time it's the best option. The way that they actually, you could go in and buy your own real estate or buy something like that. That would be way more beneficial if you have that opportunity. I know sometimes, like for me, I had a full contribution from the employer, so that's why but I would never, based on what I have seen in Ireland, I would not be paying into it. It's just not. It's so bad.
Well, see, the thing is that you took a look at it. That's what I mean by being in control. You took a look at it. So, and you made a decision. And the thing about having the freedom to make a decision, even if it happens to turn out not to be the greatest one, you made, you bought in, and then the market went crazy, or, the bottom fell out. It was your decision to make. And often what I see is that folks want that decision. They want someone else to bear the responsibility of their decisions because it's scary. I mean, I don't know if they're still burning up stuff in France, but
I think so. Yeah.
They're like, nope, we want you to give us a check, and we start working, and we start working early, and we want it. But they said, okay, but we'll give you these crazy taxes too. Because as an American, when you look at the tax bill of some nations in Western Europe, and many Americans are here going, yeah, we need the same plan they have over there. And it's like, dude, I'm not giving away 60+% of my take home. I'm not doing it. No, you need to figure out how you're going to take care of yourself and your family in the future when you're older. You need to figure that out. I can't. I'm not giving that away, because once again, you give away that power. Do you really know where all that money's going? Exactly. And that's the thing. So, I mean, here in the States, they raid our pension fund, the Social Security. If you work here, you give up a percentage of your salary, hard dollars. You never even see that money. It's gone right into the Social Security, right? Well, Congress raids it regularly and puts an IOU in there for cash. So yeah, they owe each other. They go in the till in the petty cash drawer. They write a note. Yeah, I owe you this. Okay.
See, that's the other fair as well. Like, because I mean, even if you looked at what they done in Cyprus, they just kind of emptied people's accounts, and you're saving, you're putting in your money, and then they just decide, yeah, you're no longer getting it, and that's the fair that they have full control. Government decides what they want, put their hand in the till, yeah, an IOU, but then it doesn't exist 10, 20 years down the line after you've put all your hardworking money into this.
Yeah, remember that we can't pay them. Yeah, and we just passed the law that we don't have to pay you. What? Yeah, remember that IOU? We just passed the law. It's no longer good. It's good. It's not good.
Yeah, we burned that piece of paper. I saw you talk about accidental death benefit. What you might tell me a bit about that?
Accidental death benefit is when if you die under certain circumstances, it can increase the amount of your death benefit. So let's say you got a policy, $50,000 if you die. Your beneficiary receives $50K if you die. Well, you can put a rider on a standard policy where if you die if you're hit by a car, accidental death, you hit by a car, piano falls on your head, that sort of thing, it doubles the death benefit. Now, what do you have to watch about accidental death?
Is your wife will throw a piano out off the building on top of it.
That's one. Or often, because the cost of life insurance goes up as you get older, right? Is you'll get a letter or some type of brochure, say from a bank, somebody you trust, and they say, hey, you can get life insurance for $15 a month, $100,000 coverage. Well, when you're 50, $15 a month for $100,000 and you smoke, you're like, yeah, I'm signing up. I got life insurance. Then lo and behold, something happens to you, cancer, something non-accidental, and the poor beneficiaries find out all you had was accidental death insurance. You didn't have regular, if you die, if you just wake up dead one morning, insurance. You had this. You had, if I get hit by a train, die in a car accident, piano falls on my head, insurance. That's why it was $15 a month for a crazy amount of coverage at your age. So
the spouse has to move the body and put it on the train track, basically, and bribe the police officer so that you don't get jail time for it.
Oh, yeah, because so it's, again, man, I just keep coming back to it. It's personal responsibility. And a lot of people don't want that, man. That's too much for them. They don't want to take time out to read. They just want to watch TV and, have a Guinness. They don't want to put in the effort. And it takes some time. You got to turn off the TV and you actually got to read the darn plan they sent you or what you're about to sign up for.
Unfortunately, people, they take trust into those that represent the company. Because I remember my parents from a young age, it was a company, Irish Life, and they had a very good death benefit. So they were paying into it monthly. And then two of the guys came years into it and kind of scared them into signing something. And later they kind of realized they had seriously reduced what they would get. And they tried it on again lately, because my dad is 77, my mom is 73. And it's like, no, they've been paying it into all their life. And it's like they get $5,000 or something like that if they die.
Right.
And it's like, it's sad because, I mean, they have seriously invested, just to look after the other partner, cover the funeral costs and a bit more.
Exactly. So that's why life insurance, even on this side of the pond, has a rep to it. It's like, well, what was this and what did this mean? So, because I'll tell parents, and I've sold life insurance policies for children, and you'll hear, kids don't need life insurance. Sure, they do. They need it. One, that horrible thing could happen before they turn 18. They could lose the ability to get insurance because they develop some type of an illness. And these things build cash value. So buy your kid a policy. Buy your kid an independent policy that's free of yours. It is just that life insurance is often viewed as an expense, and we can find something else to do with the money. No, you kind of need that policy. You kind of need a base policy. You need a basic policy. But then it comes down to the other thing right behind life insurance or just financial planning is income. And when it comes down to it, quite frankly, you need to get your income up, man. You need to figure out some way to produce more income. That's the problem you're having. Your problem isn't so much inflation, it's the amount that you need to increase your income.
And with payments then, because I've seen a lot of fraud with the insurance companies regarding payout. Like, for example, when I was doing a lot of property, and at one stage there was a leak and the insurance and it was like you couldn't buy the paint for the amount that they were paying out. And that happens a lot even with cars and everything. If like a friend got knocked down and she got awarded something like $1,000 or something like that, and she can barely walk, she's ruined her life. And is it the same with the life insurance, that they have so many dirty tricks that you have to, because I know there's brokers that work to get the insurance because they know the rules, they know how to navigate. Is it the same with life insurance, or is it more safer and that you get paid out as per?
Where you find that the kick to life insurance is not the payout. Here, they're real good about paying you what the benefit that they said they were going to pay you. You made the payments, here's the benefit. So the rules are pretty clear, like about suicide. And that's a misnomer. Life insurance does pay out for suicide if the policy has been in place for at least 2 years. That's pretty standard in most states. So no, you can't get life insurance today and then go into the room next month and shoot yourself. No, that's not a good idea. But it's not a good idea to shoot yourself. But the life insurance won't pay off. But if the life insurance has been in place for more than 2 years, yes, the life insurance will pay out to your beneficiaries. So that stuff they show on TV, oh, we got to make it look like it was an accident, so that the life insurance will pay. That's not the case. It was been in effect 2 years. So I will have to give you a bit of pushback on the payment of the benefit. The benefits are paid. They're very stringent on that. What does happen is that life insurance here has been turned into a financial vehicle, and people are starting to view it as an investment, that you can do all these tricks with life insurance, that you can overfund the policies and use it as a personal bank and things like that. And you can do that. But that are for folks that are at a certain economic level, right? So you're presenting something to someone, you really can't afford to do that. The most important thing for you right now, and the reason that you need to be purchasing life insurance and getting it in place, is to care for the people you leave behind. You're head of household, and you want to make sure that there's money for the surviving spouse, that there's money for the kids, that you're giving them options and time when you're not here anymore to provide that income, right? And oftentimes the quote scams that I'm seeing is certain types of insurance are purchased to be used as retirement vehicles or to produce income later in life, and they're not funded properly. People don't understand how the policy is structured, and the policy will blow up on them. It'll reach a point in cost where they can no longer afford it, and they've lost all the money they put into it. Now that does happen. Or they didn't understand that this was a term policy and that it only had a life of so long, and then the term ends, you don't get your money back, and you're no longer insured, and now it's more expensive to get insured.
Yeah, and the reason behind them then is they're so cheap, but if something happens, you're covered. But people think they're getting a bargain, but they don't read the fine print. Yeah.
Because the thing is, okay, let's say you're a young guy, and you're spending, a young person. It's not just guys. So the bulk of the money, you're laughing it up at the local drinking hole, and you're taking cool trips, that sort of thing, right? But you're tired of your mom bugging you. So you do get a term policy. A 30-year level term for a 22-year-old guy is like pennies a day. It's like a cup of coffee, and not even an expensive one a day. $15-20 a month, right? Got like $250,000 worth of life insurance. So at some point you get older, you get married, but you're still feeling pretty good because you got 250,000, right? Well, you have to convert that into whole life insurance because term is just what it says. It's good for a time period. So it ends, if you bought it when you were 22, your 30-year term stops at age 52, literally. It stops. The insurance is over with. You've rented insurance for that time period. You don't get any money back, and you're no longer insured. Well, trying to get that same amount of death benefit, that 250,000, which now you really, the people you leave behind really do need that amount of money because there's kids, you probably bought a house, all that stuff. Trying to get that same amount of death benefit is going to cost you way, way more than the $20 a month you were paying, right? So again, you have to pay attention. During the time period of the term, you have to convert that into a whole life policy. The price is going to go up, not tremendously, because it's going to be based on the 22-year-old you, but you have to convert it. Again, you have to pay attention. It isn't just, you can't just float along in life. You have to pay attention. You have to, where you're putting money into a 401k at your job, you got to start paying attention. How much are they matching you? Where are their fees being charged? Which products did you choose your 401k to go into? Did you pick any products, or is it just going into a basic money market account, which I've helped several people stop doing, and you're missing one of the biggest runs in market history because you're getting 2-3% because it's just, you're just putting money in, they're matching, but you never selected a fund or a vehicle. So that, to me, that's what it comes into. You're not paying attention. You just heard something, you signed, and you just kept it moving. As I said, you had to cook dinner and check homework. So
I think it's actually very irrelevant, all the different things you're saying, because, you know, when somebody's picking a car, they'll spend months picking it out. Going to, if they're going on a holiday, they'll spend. But when things like that, they just go, yeah, you'll do. They go to somebody they just believe has their best interest, and not everybody. Because I mean, I can hear by just from listening to you that you're guiding people in the right direction. But I know, unfortunately, there's a lot of agents out there, and they're basically guiding people based on the commission that they get. And it's, at the end of the day, you have to kind of be sovereign in yourself and make sure you know what you're doing. And also check reviews of the people, because when someone is good, people actually realize it and write about it.
Yeah.
But when they're shafted, they also write about it. So it's a case of, you know, doing your own due diligence.
Oh yeah, because like you mentioned about your parents and their policies and how it's been reduced and things like that. And you're like, well, you mean my dad paid into this policy since I was a little kid, and all you're handing my mom is a check for $25K, and this guy's been sending you $30 a month for 40 years? What?
Not 25K, 5K. It's gone down to 5K. Yeah.
So you're like, what the hell? So again, that's how life insurance got a bad rap. You know, they bought it. They had enough. They loved their family enough to buy it. That was the one thing. And they made place for it, but they just didn't buy a good vehicle. They didn't buy a good policy, and they never checked it. They never went back and started asking some questions about it. And you have to do that. You have to take some responsibility. Everything isn't, they scammed me. Sometimes you left your door unlocked. You helped them rip you off. You left your door unlocked.
Brilliant. So just finally, because you know, I mentioned it at the start, I love talking to podcasters. So you've got your own show. You might let me know. I know you had other ones, but you've got co-hosts that you do a show with as well.
Yes. The audio podcast, Grown Women, Growing Wealth. We talk to women entrepreneurs, particularly Gen X women who have, you know, they've either like left corporate and went out and to become entrepreneurs, or the kids are out of the house and they still want to do something. So talking to them, have them tell their stories, and then also bringing them information like on sales, marketing, bookkeeping, you know, subject matter things that really help them out, tax, Because the great thing about podcasts is that you get to learn a lot about business. Whatever subject you're focused on, you get to learn a lot because people come in and start talking.
Exactly.
Like, I didn't know there's a business that helps you sell your business. There are people that you bring in that help you prepare your business to sell. I didn't know that. It's like, yeah, and show you how to sell your business for top dollar and things of that nature. I didn't know that existed.
Yeah, that's what I love about podcasting. It's like the amount of guests you get. You'll always learn something, and then you can then do further research. And it's like I know I have changed my life. I'm podcasting since 2018. I've changed my life based on conversations that I've had on my show, just by kind of taking on board. Not always just listening and believing what somebody says, but actually going, this makes sense. Let me investigate further and go, ooh, they were right. Thankfully, I've that I got them on my show.
Oh, I'm going to read that book, and then you read that book, and that sends you down a rabbit hole. You're like, okay, so that's a real business. You're kidding me? Yeah. Okay. Yeah. I'm in.
So is that one with Podbean that your latest one? Is it? Because I saw that with the previous ones you would one with Spreaker, because it's with the coaching. I'm just curious with the different things. I've got one on Podbean myself.
We're hosting with Podbean now. The Grown Women Growing Wealth is hosted with Podbean. We liked them. My first early stuff was with Spreaker. Ooh, you went way back. That was those I think I had about maybe 4 or 5 episodes. I was by myself. It was like 20. Gary V had talked me into it. It was like 2018. And they pod faded because I was by myself and I was by myself. That's the main thing. When I had accountability, when you have a partner and you got to get together and we're meeting on Wednesday, it developed its own energy. Because we got about 75 episodes up, so 3 seasons. So it was going great. We're now focusing primarily on YouTube now. She's got a channel and I've got a channel. So because YouTube is it's still a cash cow. And it's still growing, so.
No, excellent. Yeah, I mean, I've got stuff on YouTube as well. Unfortunately, I've been censored a lot. I got kicked off with my Awakening one, and I got 2 strikes. I got another strike recently on my personal channel based on a guy talking on politics. And they said that I'm not even going to say it here because I might strike this one, but the C word. And I wrote back, we didn't even discuss that. And within 5 minutes, they said, yeah, we've reviewed it. And it's an hour and a half interview. And 5 minutes, they've reviewed it and confirmed, no, they're sticking with the things. So, but when you get it right, when you can get the information out, YouTube is a good platform because loads of people are watching the YouTube videos.
It is. Because I know, because YouTube, particularly I know the Gen Zs and even the millennials, they don't watch much TV. Because TV here in the States is turning into live events. Because they're fighting like crazy for the the big major leagues, baseball, football, basketball, hockey. Because that's about the only place that TV is growing or has a consistent audience is to catch games. And but as far as the old school, just, Hawaii Five-0 and those shows, Happy Days, stuff like that, no, folks YouTube is taking over. So, So I would tell any podcaster, I know the love with audio and that's cool, the mics and all that, that's awesome. But put a video component in there. And spend a little extra to get you a video editor, because particularly reels and shorts will drive folks to your podcast for downloads. They'll hit it and they'll hear something and they'll go, hey, who is this guy? Because actually that's how I found Joe Rogan years ago. I found him through YouTube. I didn't find him through, looking up on, well, at that time he wasn't just he was everywhere. He wasn't just on Spotify and stuff like that. So I found a couple of podcasts that I've heard reels and I go, and okay, I'll give you a try.
No, definitely a good way of doing traffic. And I mean, this podcast and a few others, I'm on Spotify, so it allows me to put the video up. And I like
Mhm.
watching Joe Rogan and Patrick Bet David as well. It's just nice to actually just watch the people as you're listening, and you can speed it up as well, like on YouTube. I
Mhm.
mean, I usually, it allows you up to buy two, even though it says 3.5 if it's audio only. But still, I think it's a platform people prefer rather than just the audio.
Oh yeah. Oh yeah. It's great.
Listen, Daphne, thoroughly enjoyed our conversation. So you might let people know where they can get you.
Hey, the best way to see me is Smart Money Chick TV on YouTube. So we're posting there. I got reels, and then there's my link tree. I'll be sure to give Roy my the actual address, but it's Linktree / the Smart Money Chick, because that's where all my links are, all my social and everything, Instagram, that sort of thing.
Okay, excellent. Yeah, so I'll make sure I put that both on the audio and the video. So thanks very much, Daphne.
Hey, thank you. Hey,
No,
thanks for having me, and you
no
have
problem.
fun over there in Poland.
I will indeed. Thanks very much. So that's all for the crypto podcast. And I'll also say the awakening podcast, because I think with the financial information that was shared today, it's actually relevant. So I'll put it on that one as well. So be sure to give us a thumbs up, 5-star rating, share with your friends, and you'll find everything about me, my other podcasts, and the coaching on bio.link/podcaster. Until next week, take care.